Contrary to what has happened since 2024, gold prices have been volatile this year. Last week, the entire precious metal complex saw volatile movements with gold, silver, platinum, and palladium giving up the gains made this year. Gold has not been able to go past $4,750 an ounce after slipping from a record high of $5,608 an ounce seen on January 29. To give us more details on what's happening on the gold front, we have with us Mr. Amit Modak, Director at P.N. Gadgil Sons. Welcome to Trending Commodity Pick Show, Mr. Modak. Gold has shed over 20% of its gain after rising to a record high. In fact, it's lower than what it was at the beginning of this year. How do you see gold behaving going forward?
See, I think between 25th and 27 January, it was at all-time high in dollar term. In rupee term, it was equal on the 13th of May again because of the change in duty in India. Internationally, it was lower than that 25th or 27th January price. Gold is getting consolidated here. Gold is not going to lose its shine. Many people are thinking that it will get drifted, but I personally think that it will not get drifted. There are many triggers which will push the gold prices up. One major trigger is the inflation, which is going to be there worldwide. Right now, dollar is becoming stronger, but as the Fed or any other entity starts saying something adverse to the economy or statistics start coming adverse to the gold market, then gold will definitely will go up with taking that trigger. And everywhere there is a depreciation of the currencies in the local market. Inflation is there worldwide due to this war, Iran America war. That was the impact. Now it will get diluted, but still its impact will remain for another 3 to 4 months. Whatever negative impact was there, it will not get recovered. As far as India is concerned, monsoon and availability of fertilizer at higher cost and all these things will definitely matter. But in longer term, gold will be going up and it will break its earlier top also in next 12 to 15 months time.
ETFs are also seeing investors exiting. Over the past 5 weeks, the net inflow has been negative. In your view, what's happening?
Right now, equity has started moving up after many days. Means it was lull right from second week of March, and that way it is lull from the January onward. Now it is started picking up, so there will be shift of one class of asset to other class of asset. So gold was the safe parking kind of the things. So people parked there and they made good money out of that because in Indian market prices are still near to high because that 1,70,000 both the time in January for it was just for 24 hours. In again in May when duty fluctuation was there, again it was for 2 days. Otherwise, price is mainly between 1,50,000 to 1,60,000. People have invested somewhere around 1,10,000 to 1,30,000. So people are booking profit there in the gold and shifting their assets or the funds to the equity market. That is my perception or my thought process, and that's why there is outflow. There is nothing serious gold as losing its shine or like that, but there is a shift from slow moving asset to fast moving asset.
What sort of trend have you witnessed at P.N. Gadgil Sons so far this year?
So major trend started from May, June 2025 when that price constructively crossed that 1 lakh mark. And people started looking that it will not get corrected in a shorter term. And it happened likewise also. So people started buying as much as they were having in their pocket. So their ticket size in rupee term remains same, but in grammage term it goes down. And so if you see as an industry, gold industry is saying that we have progressed by 40% YOY, but actually 60% price increase is there. So quantity wise industry is decreased by 20%. So, and same thing is there everywhere. So I am not the exception. So we are also looking to the same trend that ticket size in a rupee term remains same, but in volume or the grammage term, it is coming down. And moreover, since May, June 2026, 2025, sorry. The main trend has changed that for buying the gold jewelry, people are exchanging their old jewelry more and more. That time, at the time of June 25, it was near to 40-45%, and I have observed surprisingly, currently it is reached to 80 to 90% of the total sale.
How is the trend for digital gold? How do you see the demand for it?
Basically, digital gold is a confused thing. Many people think that ETF is also digital gold, but yes, it is digital gold, but regulated digital gold. There are digital gold platforms, and for those platforms, there are no regulators right now. And RBI is then SEBI, both are saying that they are not taking any responsibility for their correctness or the monitoring thing. So for me, if somebody is investing through digital gold, it may be convenient for he or she due to the online buying, but it is not regulated. To that extent, they should keep in mind they are taking certain level risk. I am not saying that all digital gold platforms are bogus or not reliable. They are reliable. They are also there years together in the market. But as far as regulators are concerned, they are saying that they are not ready to take responsibility for the same. And slowly it is moving up because Gen Z and Millennium, those people are preferring the online. जो भी tap पे है, they want to click that. So that way it is doing better as compared to earlier years.
How will the situation vis-a-vis gold be during the festival season? How is the trend for low-caratage gold jewelry?
See, as I said that lower grammage is happening there. Same way lower caratage also saves the money with keeping size same. Because if I am buying say 9 carat 10 gram gold, vis-a-vis earlier I was buying 22 carat 10 gram gold. So for me the investment may be near to what it was there in the November, December 24. Same thing will be for 9 carat for same grammage because of the higher prices. And so that carat adjustment is happening very largely in market from 22 carat shifting to 18, 14 and 9 carat. And even for the diamond jewelry, earlier it was getting made exclusively in 18 carat. Now people are asking the orders even in 14 carat to save on the gold component cost of that ornament. And season is going to be good because seasonal, if we see the Gudi Padwa or the Akshay Tritiya, very recent two festival which were there. Those festival matches with last year's in quantity also. Value-wise, those were higher by 40 to 70%, but in quantity also they match. So people, when there is a festival or when there is a specific season, they are maintaining their buying. And season, as far as wedding season is concerned, as I said, there is a more exchange rather than fresh gold buying. But they are keeping grammages same when it comes to the wedding.
Thank you kindly, Mr. Modak, for your valuable insights. Thanks for tuning in, viewers. Keep smiling and be happy. Until we meet in our next episode, this is Subramani Mangumbu signing off. Good luck.